Hello, hello, hello. Hello. Hello, 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 hello. Hello. Finally. Hello, 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 hello. So let me see a few more things here. Show on stream. Echo cancellation on. Adjust microphone volume reduced. Okay. So guys, is it working better now or is it still bad? Speaker indicator display quality. Okay. Again, I'm testing it. Let's see if it works this time. Okay. Again, I'm testing it. Let's see if it works this time. Okay, now the audio I think is working out without echo. Okay, now the audio I think is working out without echo. And hello, this is again me testing the microphone. Jesus, such a messed up setup this thing has. Show names, audio startups. Let me see if I can. Okay, so I think it is working now and the echo has reduced a little bit, right? So sorry about the problems, guys. It was a new, or it is a new setup, not was. And I was just testing a few things out. It has some fancy features, so I thought, why not give it a try? And I think I can do things like this, like show people's comments. Let me see how much time it takes to show up on the actual screen. See, there are some things this thing allows which are good. So now let's carry on with our actual stuff. Sorry about the delay, guys. I will see how we can reduce the echo next time, but for now, let's make do with what we have and not wait any for what you call more time. Just let me know if the audio is clear enough to continue with the webinar, right? And if the echo is bearable enough, and we will quickly get started with the actual stuff. Yeah, thanks, Charles, for the confirmation. So let's get started very quickly. This is the disclaimer on screen suggesting all content presented is for educational purposes. I'm not soliciting buy or sell. If you do go on to use the views presented here for your trading investing, you yourself will be liable for your profit loss or loss of profit. Right. With the legalities out of the way, you can of course read the remaining on screen here. Let's now continue forward with a very quick introduction. Guys, my name is Nirav. I'm the admin and owner of 50eyes.com, which is the website where I have been producing my work or what do you call articles, webinars, and similar things I have been pushing there. I also have a course and a book. Let me just quickly go over the website and show you. So this is the website 50eyes.com, right? And the current broadcast is run on YouTube as well as LinkedIn, right? And we do these live streams 3 times every week, and we have been doing them for quite some time because this is the 47th in the series of these live streams. If you want to catch me live discussing these markets and ask questions, then you can join me on Monday, Wednesday, and Friday, and the timing is always 2 p.m. GMT, right? So that's about it for these webinars. A little bit more about my work. I'm also the author of the book Think with the Markets, and I also have an accuracy of 80% plus for 6 years consecutively. And this is all publicly available information. Anyone can go ahead and check it. More volume. Let me see if I can increase the volume at my end. How about now? I have just increased the volume a little bit. Hopefully, it's not too much. How about now? Or okay. Okay. Thank you, Parvez and Philippe, for the information. Let me know again if there is some issue. I have just now set it to automatic, so hopefully it should work. Again, this is a new platform, so I'm still learning stuff. So yeah, as I was saying, the accuracy is all public and verifiable by anyone. The links for the webinars are here. The analysis done is here, and the instruments are here with dates. These webinars or videos are all uploaded with the actual dates mentioned here, and what happened is mentioned here. So everything is transparent. You can just scroll through it. 2021 we had 82.22%, 2020 88.5 to 2019 84.88, so on and so forth. 2018 and 2017. You can check the spreadsheets yourselves. 2016 83.34. I don't want to waste any more time because we have already wasted a lot of time. So now let's go ahead with the actual webinar. And for those of you joining in for the first time, the way we proceed very quickly is that we go over the charts of first the currency pairs Euro USD, followed by EURCAD, USDJPY, EURJPY, crude, gold, S&P, Nifty, and then finally Bitcoin. Right? We also discussed what we discussed in the last webinar and what happened or did not happen. Okay, so as to keep a track of the number of trades. So far, we have 52 trades that have worked out during the last discussed during the last 45 webinars. These are all the big moves, by the way. So now going ahead with the what do you call the actual chart. So first of all, here on screen we have the chart of Euro USD, right? So Euro USD. One second. So in Euro USD, the last discussion that we had was that there were two things which were possible, right? And the things were, first of all, from this point of reference, we had, which is 1.10309, we had seemingly a down, B up, and C down kind of move. So our bias were two-faced. The first bias was that if this is a B, and C like complete over here, then this market should head higher, right? And since that does not seem to have happened, we also had the second bias, which I'm now going to discuss. The second bias was that if this market goes very near to the last known low, which is around the price level of 1.054, then we were holding the view that most likely this is doing the other hypothesis or the alternate view. And the alternate view was that this was a first leg down followed by second leg up and then another leg down in a nested formation. Right, there are again multiple different views which are possible here, but we are just sticking with the one which serves the purpose and also does not mess with the direction. So in this nested formation, the view was that if this is a 2, then it should follow lower for wave 3. What I'm talking about 2s and 3s is basically the impulsive progression in an Elliott Wave terminology. Right, an impulsive progression in a lead wave terminology basically consists of 5 waves. For those of you who are new over here, and the 5 waves are wave 1 down, 2 up, 3 down, 4 up, and 5th down. Excuse me. Yeah, so because this is the impulsive progression, where I have labeled over here is the first and the second, like the first over here on the right hand side and the second on the right hand side, so on and so forth. If you dive deeper into it and you magnify the progression of the third wave, the fifth wave, and the first wave, you will find that the third, the fifth, and the first, all three have 5 waves inside of them. So what basically I'm saying is that if I magnify this wave 3, then we will find something like this inside of it. That in internal progression we can then label as dot 1, dot 2, dot 3, or whatever you would like. Right, that is basically exactly what I have done. So long story short is, in this progression we have the circle 1 complete, we have the circle 2 complete, right, and the circle 3 is still in progression. Because the circle 3 is in progression, we have now gone on and decided to label the internals, which are, as you can see over here. Now this is, as I said, one of the multiple things that is possible. So if this is the thing that is happening, then that means this market has more downside remaining, which also means that we need to determine the entry and exit points. Now see, since it has already gone and given a low lower than the last low, it has already triggered the short entries, which we discussed in the last webinar. Now the issue comes at what are the stop losses. I personally would like to hold a stop loss near the last high around 1.06723, and the reason is that most likely if this is going to be a wave 3, it should be either already in wave 3, that is wave 2 is either already complete here, and even if wave 2 is not complete here, let me change back the color. So even if the wave 2 is not complete, once again here, then I believe it might be forming a possible flat like this. And generally speaking, in a strong downward movement, the flats will generally not cross the last high 1.0690, which is the level. So long story short, this is what we expect as our technical stop loss. Right, I will adjust it as the market continues based on the activity or the price action per se, and the expected direction is downside. Right, I will not be taking full entries here. Right, all these shorts are to be taken with partial entries. Generally speaking, if you enter with 10 lots, this is an entry for, let's say, 1 or 2 lots, and if it pulls back, we will add 2 3 more, and when it starts to continue down, go down, then near the break of the low, we will again add 2 3 more lots. So that's how we need to enter here, because we do not have 100% confirmation. Yes, it looks like it is heading lower for dot 3, but I have seen weirder stuff happen. Right, so based on that, partial entries for shorts already triggered, by the way, and we have already determined the stop loss. I guess you guys would like to know the targets and everything, but why? But let's just quickly check it anyways. I'm not going to be very concrete with the targets because we do not have the exact determination point for the second leg. So roughly speaking, the targets should come around minimum is 1.479, and the expected target is 1.42, 1.042, sorry. So 1.042 is the expected target level, but I'm not holding these targets as very important levels because we still need a confirmation for the actual point where we calculate them. For instance, right now we have just assumed this to be the end of wave 2, which may not be the case. And based on that, the targets will change. So anywho's, that's our quick take on Euro USD. We expect downside to continue on this counter. And we have discussed all possible scenarios here. Let me know if you guys have any doubts or queries in the comment section. If not, please do type in clear or understood in the chat. And we will then move on to our next chart, EURCAD. Let me see. Perfect. Okay. Thank you, Chal, for the confirmation. And what about the other participants? While I go ahead and load the next chart, please do let me know if you have any questions. Thank you, Fraser. So now let's quickly head over to the chart of what is this? Thank you, Parvez. And let's now head over to the chart of EUROCAD and see what's going over here. So first of all, on EUROCAD, we already had this discussed. It's actually not doing anything new. But for our new participants who might be joining the stream for the first time, let's see what's really happening here. So first of all, this is our point of reference. Point of reference is basically the starting point of the analysis at the price level of 1.42389. And the expected progression is represented by this wave count, right? What is this wave count? This wave count is basically suggesting that we are in a possible impulse up. And as we have already discussed in the Euro USD chart, a possible impulse up is basically a 5-wave progression, something like this, right? And in a 5-wave progression, what we basically are looking for is a first wave up, second leg down, third wave up, fourth leg down, and the fifth leg up. Right? This is basically what we call a 5-wave progression, right? Now, since in this chart we have already got things labeled, I don't have to do much work. Complete wave 1, complete wave 2, and we are currently in the third wave, right? And as we discussed in the last count also of Euro USD, waves 1, 3, and 5 will all have 5 waves inside of them, right? This is exactly the kind of thing we are sort of seeing here. Again, this 3 wave will have 5 waves inside of it. So if we look deep down inside it on a lower time frame, actually we don't need to. In this case, it is quite visible on this 4-hour time frame as well. So what we have is the double bracket 1, the double bracket 2, progressing up for the double bracket 3. And by the way, do note that we had already discussed this count in detail in the last webinar. So it is not doing anything new. We already were quite aware of this activity, right? So now what's the strategy here? Let me just quickly adjust a few things here and see. By the way, this is a nifty tool allowing me to push some scrollable text at the bottom. What do you think of this, guys? But it seems to be having a toll on the latency. Anyways, so yeah, going forward, what I was saying was, where is this? What I was saying was that we already had this labeled out and we already were expecting this kind of movement. Now, the thing to add on here is that we don't have a confirmation as of yet that if this is just the wave 2 continuing like a flat, right? And the second thing which we expect is that this is already complete. So what will be the change in both these scenarios? Let's see. So first thing is if this is complete as a 2, then we will see something like this. 1 up, 2 down, 3 up, 4 down, and 5 up. So basically, long story short is we will see a straight up movement or expect a straight up movement. Okay. So that's our first scenario. Second scenario is that if the 2 is this double bracket 2 is still continuing, it's not here, but let's say over here as a flat or maybe still continuing down for a flat, then it will basically go down and then go up, right? So these are the two main expected scenarios. Of course, a lot other things are possible, but based on these two major possibilities, what comes to mind is very clearly that if you are long, well, then you can hold on. with the technical stops around 1.439. But if you are not long, then this is a better setup for a breakout count of a trade, right? Because as we discussed in both hypothesis 1 and hypothesis 2, either it can head straight up or go down and then up. So long story short, it is basically suggesting to us that uh, it's better we break 1.455 and then take entries, right? So it's a momentum kind of setup. Nothing more to add here, and we already have discussed the targets in our previous to previous, and I think in the last 5 7 webinars we expect the market to take out the last high, which is around 1.46452, roughly speaking 1.464, let's just say. This high basically is what I'm suggesting, right? So that's about it for this discussion. Things seem to be moving so far well, and I have discussed all stop losses, targets, and validation and entry points. Let me know, guys, if you have any doubts or queries, right? By the way, I am currently not holding longs on this counter. I will look to add later on because of the bias just discussed. Thank you, Jill, for the confirmation. And what about the other participants? Let me know quickly in the comment section if you are clear. If not, please do type in your queries. Where is the chat? Chat. There it is. Thank you, Charles. Charles and Jill. I have to see one more thing here. There are some things about this platform which I have to still learn. Yeah, anyways, leaving that aside, let's now head over to our next discussion. USDJPY, which seems to have clearly not done anything of the sort which we expected it to do. Anyway, it's irrelevant at this point. So let's just first of all start with the establishing what we had discussed in the last webinar and what seems to have surpassed so far. So first of all, in the last webinar, we were having two views, and one of those views was that possibly this market was heading up for a diagonal, like a wave A. A diagonal is basically a wedge pattern in price action terminologies, right? And once a wedge pattern is complete, we expect the market to form a possible correction in the upward direction. So in this particular case, what seems to have happened is, let me check one more thing very quickly. Yeah. So let me just first of all emphasize on what we discussed in the last webinar so that things get less confusing. So in the last webinar, we were thinking that from the price level around 1.135.35, we were expecting this market to go and give us a possible up move as a zigzag. A zigzag correction would take the market, and expectation was that it will retest this white line, right? This trend line, and then possibly fall down. So this was a classical kind of a sell setup, right? And we also were thinking of taking some counter trend moves or counter trend trades in the other direction. However, the important theme was that we expected some resistance over here and then a leg down. This was the main theme or the main analysis that we had in mind in the last webinar. What seems to have happened is this has definitely gone and given us a correction, but it has not given us the kind of correction that we were expecting it to do, right? What seems to be the case is that maybe, again, keep in mind this thing has gotten more and more complex over time. So what seems to be the case so far in time is that maybe this has given us a flat kind of correction. Why am I saying a flat kind of correction is that if you look from this point of reference, market has first given a leg down and then a leg up. The up leg has gone higher than the last high or the starting of this down leg, and then it has entered back inside a price territory. This is basically the characteristic trait of a flat kind of correction, right? Now we don't have to stress much of anything here. The setup is very clear and is not yet triggered. again, things have changed a little bit different, or things have played out a little bit differently from the last time. But overall, if you look at it from the perspective of the counts were still corrective movement in the upward direction, just a little bit more than what we expected. Now, so let's just see what's happening here. First thing is that if this market really is giving us a flat correction here, then that basically means once this flat correction is complete over here, this market will head higher and take out the last known high, which is currently around 137.887, right? So if it really is going to take out the high of 137.87, then of course we don't need to stress much and we can simply place an alert near the high, and we will be interested only if this market takes out that high, right? That's the current setup I'm holding, and since I'm not very confident about this count, it does not seem to be following the general cues or the correlations which we generally use. I think it is best to avoid trading on this counter for the time being until it gives us more clarity. But this alert for upside will only be valid, or in my case, I will only be interested in taking those longs as intraday small sized positions and not my full size trades. So again, unclear on USDJPY, but we do seem to be having some possibilities for intraday play, and I wanted to discuss them. So there they are. Alerts is placed around 137.70. Please do let me know, guys, if you have any doubts or questions, and if not, please do tap in clear. Needs to retrace lower. Philippe Calphone is saying yes, but I have often seen that the Japanese yen related pairs are not giving us very clear correlations sometimes. So I'm not holding the correlations as a very strong theme here, right? Okay. And thank you, Jill, for the confirmation, and Fraser. So now let's head over to our next chart, Euro JPY. So in Euro JPY, we discussed last time that there was a possibility for an upside setup, and the setup was based on the fact that this market may have formed a possible diagonal in the other direction. We were not very clear, but the setup was something like this. If I remove the counts and everything, that if this market has completed the C leg, then we expected that the market will not cross the high and just fall strong and give us a very big downward movement. And the second possibility was that this was not the C complete, but the C was still continuing, right? If the C was continuing still, then we would like the market to take out the high, and the break of the high would suggest that this market has at least two legs in the upward direction remaining. So let me just quickly push that in terms of counts. First thing which we were thinking was that the wave C is complete. If the wave C is complete, then it should not take out the last high and fall down, most likely in a strong fashion, which is basically 145.553 should not be broken and the market should fall down. That was the view number one. Second view was that if the C is still continuing, then this will be the possible wave one up as a wedge pattern. And the second leg down possibly looks like a flat in play, and then there will be a third leg, and then the fourth leg, and the fifth leg. So basically, we were expecting that at least two legs were remaining in the upward direction, third and the fifth leg. Now, currently, it does not look like any of these scenarios has clarified itself. It looks like it is still unclear, and this leg, although looks sharp, it does not give us any evidence of anything so far. So what we need to do here is again wait and watch for the upside scenarios. Those hearing those what you call having bearish views would have already entered shorts with the stop loss at exactly the 145.45 level, right? So long story short is you can actually play it like a double cage structure. What I'm basically saying is that this is kind of a thing people use in trading sometimes. I mean, sometimes I use it, sometimes not. But if you have a view like this, let's say you are already short on this. So what you will do is add a double stop loss here. Let me remove all this. Double stop loss, by that what I mean is that let's say if this was the 2 and the market goes up for the 3, first my sell position will be removed and then I will enter a long position automatically, right? A simple thing, some platforms even have a button for it. You can already place that kind of order just by the click of a button. So this is those kind of situations where that order might be of use, right? So I think EURJPY did go through a little bit fast, but it is kind of clear. The setup is also kind of clear, right? So guys, let me know if there is any doubts in the comment section. If not on EURJPY, please do let me know by typing in clear, right? Philip is saying I was talking about EuroCAD. Hmm. EURCAD. Yes, that may be the case. And in that case, we will expect that the flat correction will play out instead of the straight wave 3 up. But since we are inclined to take the breakout trade as we discussed, we really have nothing to worry, right? Okay. Thank you, Charles for the comment, and Parvez. Let me see one more thing here. Okay. So yeah, before we move over to our part of commodities and discuss crude and gold, firstly, guys, I would like to request you to hit the like button for those of you who are attending the stream live, because currently we are only around 2-3 likes, and I know a lot of you are already watching the stream live here, and you sort of forget at times to hit the like. And secondly, once the stream is over, I would request you to kindly share it with the people you know who might find this kind of content of use, basically traders group and what do you call a group of Discord, Slack, or whatever you guys are using these days, right? So with that, let's now head over to our next chart. WTI is crude or West Texas Intermediates crude oil. So this is the chart here. So first of all, in crude oil, last time when we were discussing this chart, we were having one new opinion. The new opinion was that it looked to me like this may have broken away from the triangle possibility, and I was interested in taking longs, which I did try, and it did not work out, so I had to exit them in loss. Right now, let's see what's happening right now. By the way, my position was sort of very short term. It's not like I was trying to trade this whole swing kind of moment, but yeah, the analysis still holds. So let's first discuss what might be happening here, or the multiple possibilities that might be happening. So first of all, our bias last time was that if the market goes higher than what is this 80.587, then we will be interested in longs, right? because we were thinking that at that point this triangle possibility is already over, and if it's over, then this market can head higher. Now, two things have happened. Not only has the market gone up and gone back, it has also broken below this expected support trend line, because we expect this trend line of the triangle to give us a support when the price retraces back to it. So one thing is clear: the triangle theme which we were thinking of is not playing out. Okay, since it's not playing out, let's see what's possibly happening. First thing that might be happening is that this actually indeed is the end of the move, and this is just one up, two down, and this is just a build up. So basically, this whole sideways congestion, if I remove this and this and this, the whole of this box, you can see the price is getting up and down, up and down. This can be possibly an accumulation, right? Right. If this is an accumulation, then we still do not have the accumulation completed by the players who are accumulating, obviously, because once the accumulation completes, they will take out the 82 high, right? And the market should then fly up very fast. Basically, some big candles and possibly very strong moves. So that seems to have not taken place. So what are we left with? We are left with nothing but again hoping for clear breakout movements, and with our old targets, not targets, old triggers placed near 82 level, right? Because 82 is the recent high of this range. So we have placed some alerts near the high of the range, and the counts are the same as they were previously. But since there is no confirmation, we just wait for them to get hit, right? I personally would like to re-enter longs only if the market goes higher than this, or near this. Let me see. Yeah, near these three peaks, right? And most or the best kind of trade would be once it breaks above it and then retests it, but they don't always do that. So I am looking to enter partial longs if this high is taken out around 82 level, right? And as I said, count is still the same. We are still expecting a possible impulse in the upward direction. So nothing new on that. So it's a wait and watch market, right? Secondly, if the count is wrong, then we will know it only if it goes below 72.273. So again, nothing new. We knew that for the last 3 4 weeks, and we have had the same discussions. Nothing interesting or very clear development here. So let me know if you have any doubts on this counter. If not, please do type in understood or clear in the comment section, and we'll move over to the next chart. So Philippe Kalfan is saying thanks for your answer. You're welcome, Philippe. And what about the other participants? Charles is saying WTI clear. Well, thank you, Charles. And Jill is also saying clear. Okay, thank you, Jill, for the confirmation. Now let's head over to our next discussion, which is gold. Thank you, Fraser. Let's see which chart are we actually following. Yeah, there we go. This is one chart, and this one is the other one. Yeah. So let's start with the this one. First of all, in gold, what we had last time was that we were thinking that this market may be following this kind of pattern, which is wave one down and two up. What basically is happening here is from this point of reference around the price level of what is this 1959 something. We expected that this market is heading down possibly as a diagonal, right? A diagonal pattern would look like five waves in the downward direction, with the waves 4 and 1 showing a price overlap. As you can see over here, the price overlap. So this is what we were expecting on this counter, right? Or we were expecting this as one of the two possibilities. And just give me one moment here. Let me check one quick thing. Yeah, so this was one of the two possibilities. Later on, our discussion became focused towards this, more focused towards this correction to the upward direction, right? We were actually able to predict this move. I'm not sure if we discussed it in the live webinar, but I was definitely in on it when it was happening in live market session, but I was not able to take the complete position size here. Let me check one thing here. All right, looks to be working fine. What is it showing again? Okay, guys, it looks like the stream seems to be having a delay on one platform. At least it's working fine on YouTube. And let's just continue. Can't do anything about it. I'll just keep this point in mind next time I create live stream on multiple platforms. Yeah, so as I was saying, we were more interested in this kind of correction, and we were having the view that possibly this market can even go higher and take the resistance in 1900 to 1880-ish level or range, right? Now, what seems to have happened is it has done none of those things, and it seems to be propagating sideways. What is it really doing? Well, it looks like it does not seem to be having any plans of going near 1880-ish levels. And the updated count here now becomes that there is a possibility that this counter is, one second, that this counter is propagating as a possible flat correction. Now let's see what that would look like on actual chart, or how it might propagate on actual chart. So it would propagate something like this. The wave is up and the B is down, and B might be continuing here. So we do not have the confirmation of the B complete here, but it does seem like it may have, and the C propagating in the upward direction. So generally speaking, in these kind of situations, we do not see a break of the last high. Not always, but generally, that's my personal observation. But seems like gold has been doing non-obvious things, or what do you call, new things, right? Not non-obvious. Nothing is non-obvious in trading. So uh, long story short is, what I personally expect is a structure like this may take place. Again, do keep in mind the B wave may still be continuing sideways, so it may still be propagating in this sideways box. And whenever the B completes, it may take either a triangle formation or complex or something like that. Whenever this leg completes, we then expect that this market will head lower, right? So this is what we will say is the expected progression on this counter of gold for now. So how will we play it? The right way to play it, if we want to play it in the direction of the trend, is to wait for this expected C wave up, right? And that basically means waiting near the for the price to go near this level, which is in the range of what do you call, 1829 to 1845. Let's say 1830 to 1845. If the price is within this range, then we expect that it might start forming some reversals possibly. And if it does happen that way, then we will start to look for possible selling opportunities. Okay. And conversely, if the market goes higher than the 1860-ish level, or sorry, 1856-ish level, then we will hold on and wait for some more clarity, because in that case, this market might be doing something other than what we are expecting, right? So far it looks like the count is holding well. It's just not doing the obvious thing. The obvious thing would have been the price going into the expected resistance level before any reversal, right? And but if you are following me from the past webinars, I will like to point out one thing: the overall swing direction we already knew, right? But to capture this kind of move, either you wait for the break of the trend line, which again we discussed in the last webinar, right? And second thing you can do is you could have taken swing shorts, that is If you enter with 10 lots, you could have entered partial shorts here and then waited to enter the remaining 8 9 shorts if the market went higher, right? So only short term intraday kind of sells were possible, and we actually were able to point that out earlier, right? If you are attending the webinars, then you already would know. And next thing is, let's see. Actually, I think the main points we have already covered. Let's see if you have any further doubts. Please do post them in the comment section while I navigate through the comments that I have thus far. Philip is saying I took the trade. Where is that? Let's see. I took the trade short after the break of the trend line out waiting pullback. Many thanks, Nirav. You're very welcome, Philippe. It's nice to know that you were able to capture the moment. And thanks for letting our viewers know that in the comment section here. And thank you, Fraser, for the confirmation, and Jill for the confirmation. Okay, in that case, let's head over to our next discussion of the S&P's 500, which is again, by the way, let's add one to our current tally of counts of trades which we have captured during these live webinars. Let me see how to push that on screen. So this brings our tally of the trades captured in the last 46 webinars to a good 53. And I think you can even see that on the screen now. Right. So a good enough number, I believe, for all the what do you call hard work we have been putting in. So now let's head over to our next discussion, which is, as I said, S&P's 500. Let's quickly load up the charts and see which one we are following. So S&P, if you guys are following me, you guys already know that we were able to capture this leg down or predict this leg down. However, since it has not yet completely finished the moment, we are still in the phase of watching it, or what do you call, if you are in the trade, then trading it, of course, right? So let's now first quickly discuss the views we have. Again, keep in mind we had discussed this in greater detail in the last webinar, which is, by the way, the 46th webinar. You can just check it by heading to my YouTube channel and clicking on the live section, and there you will find all these webinars piled up here. You can check the 46th webinar and go to the S&P timestamp. All these webinars are obviously timestamped, and see the detailed analysis. So in this webinar, we are just going to cover the analysis which we are currently thinking is playing out in the market, right? So as when we were in the last webinar, the date and time was, let me just quickly check and push it on the chart, 6th of March, okay? And the time was somewhere around, actually it was near the high. So when we were doing the webinar, it was almost near the high at the top, right? So anyways, the view was that we were expecting this to be an expanding diagonal. If it is really an expanding diagonal, then the market should go lower and take out the low of 39.21. So this is the expected movement, right? Now the other thing to point out is that if it really is working in our favor, which does seem to be the case so far, then we do not expect obviously this high to be taken out, 4077. So it actually acts as our stop loss, and as such we don't even need to go that higher. I think we can clearly take 4058, or let's say 4060 as our stop loss currently. So this is our current running stop loss for any trades that you may have entered if you were following me in the last webinar, of course, right? And what is the expected progression? The expected progression is that this market will head lower as a possible ABC zigzag correction. Right. So if this is ABC zigzag correction, then where are we in the current formation? Let's just quickly have a look at that. Currently, it looks like we are very near to closing the wave A down. Once this A is complete, then we expect some pullback, right? And then the leg down to continue. So this is the expected progression on this counter. Again, we will not try to predict the exact turning point of B or everything. This is not that kind of trade. This is the kind of trade you just enter and continue trailing. Of course, if you have entered with partial shorts, then of course you can add more on possible pullback. So for now, it looks to be working fine. I do not think there is anything what do you call substantial or unclear here, because we have discussed it much detail beforehand already. But if you still have any doubts, please do make sure to put them in the comment section before we head over to our last two charts of Nifty and Bank Nifty. And again, do keep in mind, guys, that you have shared the content that we are sharing here. That is the webinar link once the webinar is complete. And do not forget to hit the like button. Now let me just quickly go over the next chart. It looks like this is 5, by the way. So we have at least 4 or 5 charts of Nifty. Let me just quickly check which one is the exact one we are currently following on the webinars, and we will then proceed. Thank you, Jill and Fraser, for the confirmations. And hopefully you guys are also sharing my content, as I keep requesting to you guys so many times in these webinars. Again, give me a few moments before we are able to load up the actual chart. Looks like this is not the one. Maybe this is the one. Okay, yeah, there it is. So Nifty 50, let's see quickly what's really going on over here. The chart is now on screen. So Nifty 50, as we discussed in the last webinar, we had the bias that we have a possible upward movement as a possible impulse, and then we were able to predict some important levels. Those levels were, as you can see, marked by these blue lines. The first line is coming around the price level of 17,680, and the second line is coming around the price level of 17,600-ish something level. 17,6. Let me see actually. 17,610 actually. So around these two levels, we were expecting that the market may reverse. So what happened in the session is the market gapped down and then went lower to exactly our marked level of 17,610. We were expecting it to be a possible wave 4, and then we were possibly thinking that the market will head higher for the fifth leg in the upward direction. Ignore the stuff in between, it's all intraday stuff. I am actually using the same chart I'm using for trading to discuss. That's why you might see a little bit too much stuff here. Now, see, the thing is that this one actually worked out precisely as discussed. If you, some of you or any of you were able to take the trade, please do let us know in the comment section. But the idea was very simple, which is what we actually discussed in the last webinar, was that we will wait for a possible reversal around this level or this level. And if we do see some sort of bullish or strong movement, then we can take long, or the other idea is you can just take a small partial long and push the stop loss a little bit lower than the last support, which was around 76.10, as we already knew, or as we already discussed in the last webinar. So it not only went up, it has sort of gone up, and is currently suggesting that possibly it's heading up for the wave 5, right? So we can now again count this as our trades that worked out, which will again put our tally by +1. So making 54 trades that have worked out in our last 46 webinars, right? So I think that's again a very good count. Let me see. Yeah. So again, as I said, we are doing good with the number of trades we have been able to capture. And let's now see what is the current view. So the current view actually is nothing new. We have already figured out the count. It seems to be following. So what we expect is this kind of movement. If this is actually the wave 4, or even if it's propagating sideways, we expect the market to head higher. The only thing is we do not want to see the market move any time lower than 17,610. Anytime it does that, then most likely something is wrong with our analysis. So long story short is we are biased toward the upside because of the current price action, and we expect the market to take out the last high around what is this 17,798. Okay. So based on that, what I'll be doing is I'll be looking for intraday long trading opportunities. That is basically every pullback is a buying opportunity kind of scenario, with keeping in mind that anything below 7610 is just suggesting complete change in trend, and anything below 17650 is suggesting extreme weakness, right? With these two levels in mind, 17650 and 17610, we will look for longs in the coming session or coming day, right? That's all for our discussion on Nifty 50. Let me know, guys, if you have anything to ask here. If not, please do type in clear or understood in the comment section while we move over to the chart of BTC. So BTC sort of known what do you call extremely clear, or what do you call tradable development here, and the reason for that being, again, I'm just putting it out for the new viewers here. See, in BTC, we had already discussed, like, I think during the beginning of these trading opportunities webinars, that this might be something like this, flat correction. Now, the thing is that after a flat correction is complete, we can see a massive drop, basically a drop below the last known around 15,470, right? So if the market gives us a massive drop, then that will not be out of the ordinary. And because of that reason, I'm suggesting no longs for now, right? And how do we know if the long situation back into play? Currently, we have seemingly suggestively, or what do you call, as per our counts, completed an impulse from the point of reference around 15,500, roughly speaking, to 25,200, roughly speaking. And if you are following the webinars, we were also able to catch this leg and this leg, right? Because we were able to capture all these moments, we have already done the good part of the moment. Now, as I was saying, we are only going to become interested in these new longs if they happen to appear. If the market takes out the last known high around 25,200, okay? And the reason for not entering longs, I just discussed the possibility of flat following a huge drop downwards, right? So nothing new to add here, as I said. And the reason for being cautious and not adding longs partially right now and looking for re-entry later is that if the drop really does happen, then the downside opens up possibilities of 10,000 and maybe even lower. I don't want to get into those because we will check it when it comes to that. And most of the people trading this instrument are generally not really traders; they are sort of investors, is what I have seen. So it I think is not that required to discuss at this point. But anywho, if you have any questions, please do let me know in the comment section. I seem to have not checked the confirmations from the last one. Okay, thank you, Fraser, Parvez, and Jill for the confirmation on Nifty. And yeah, guys, one last thing. Uh, we have done 47 of these webinars now, and you guys have been attending them live for quite some time. So at this point, as you can already see, we need a little bit more participation, as has been the case for quite some time. I have always been telling you guys to what do you call, share the content and whatnot, but still we are not at the level where I was expecting this series to have headed. So I would now again at the end of this webinar request that you kindly share it in your groups as fiercely as possible so that we can get more viewers. And around the 50th webinar, I might be interested, or I am thinking, as has been suggested by some of the viewers as well, and the students in my private training groups as well, that I should put out some sort of something like where I can take the what do you call charts from you as a possible basis for discussion. And I'm thinking maybe we can hold some private webinars for that. But so far my view has been that I do not want to start another private group, because I already have a group of my students on Slack, and the analyses I post there are kind of very complex compared to these, and only the people who are in the group, I believe, are going to be able to get the most benefit out of them. So I am thinking of avoiding a private group, but still starting something where I can take some requests of charts and discuss 2 3 of them privately, but again on YouTube. We can, I think, do a poll on YouTube using the community feature and do that. So let me know if you guys would be interested in it. And further details I'm thinking of providing near the 50th webinar. Maybe I can make a page around 49th, or just discuss it in the webinar itself. But just keep in mind, something new and more value providing will be coming for you guys. And I guess that's about it for this particular discussion. I better be leaving now, and I'll watch you guys, or talk to you guys, I should say, in the next webinar. Right. So bye, guys, for now, and see you soon.